It's Jeff Scott, and welcome to this week's top-down review. It's actually 5:25. Happy Memorial Day, and we thank you for service for any of you who are veterans. And actually, it says the 24th, which is Sunday, but today is the 25th. My email address for any contacts is hgsidoc@gmail.com. And if it's sell in May and go away, is the old saying, well, we're near the end of May, so is it time to sell? And that's the question mark, not necessarily the answer. Disclaimer, this is for educational purposes only. Any recommendations I make are in the spirit of education and should not be considered investment advice. I am a doctor, not a broker. I am 100% independent. I have paid for all the tools that I use and continue to pay for them. No one pays me to say good or bad things about anything, and I use tools that I have paid for and use as part of my daily routine. Trading involves risk, and you alone are solely responsible for any investment decisions you make. As always, I like to pay homage to those folks who I credit with much of my knowledge and my trading success. I started with Bill O'Neill, as many of you have, as a can slimmer, and that was advanced two ways. First by Ian Woodward and Ron Brown with Woodward and Brown Investing, using HGSI software, automated much of the teachings of Bill O'Neill, as well as added their own special sauce. Morales and Katcher, ex-money managers of O'Neill, who added things like Bible gap ups, pocket pivots, and expanded upon the teachings of O'Neill. Alexander Elder, who I just think is just a smart Russian psychiatrist that came to the U.S. that's written a number of good books, and his things that I've learned from him, Force Index, Impulse, and others, just make sense. My friend John Person. John is an educator and a trader. He's been trading since the time I was in medical school. John is an expert at stocks, commodities, options, futures, etc. And you'll see how I incorporate some of his teachings as well. I also call out a couple of excellent books that he's written. This is my buddy in the lower left corner, George Lee, who is a trader from Canada that will be my partner at my upcoming trading education program. Van Tharp for money management, Cooling, a very good $4.99 book on Kindle for volume price analysis. And Tom Dorsey, even though I'm not a point and figure guy, I really like how he thinks about relative strength analysis, comparative relative strength. Also calling out Gil's new book on short selling, which was released within the last month. I own a lot of different programs. I use a handful. I use my real-time platform of TradeStation, Thinkorswim. I also like Genesis. In fact, I think Genesis is probably the best of the real-time platforms out there. It is expensive, and for many of my listeners, probably prohibitively so. But most of the big experts that you'll listen to when they do presentations, they'll be doing it on Genesis for a reason. For analysis, I use HGSI as my core product, supplemented with EdgeRater. I'm a big fan of seasonality. You can pick whichever one you like. Magenta Trader going through transition. Seasonality Trader, which is the old Magenta Trader. Best Choice software are among three of the best on the market. I included John's indicators for TOS, TradeStation, and Genesis. And I use a number of websites. Probably can't see this too well, but it was kind of an interesting day Friday. I made money on Friday. Hopefully you made money on Friday. But it wasn't a rip-roaring day where the entire market was up. In fact, as I look at this, I look for patterns. And what I usually like to see would be certain sectors where there's a preponderance of green and certain sectors where there's a preponderance of red. You don't see that. Healthcare had a lot of red, yet biotech had a lot of green. Transport still mostly red. Home builders were red. So those were some of the things that I look at. But when you look at trying to find things that are all green, besides maybe consumer discretionary, which seems to be doing fairly well, it wasn't a day with standouts to the upside or the downside. And perhaps a lot of that was due to the pre-holiday spirit and people turning off their computers early on Friday. Market thoughts, the first two lines haven't changed. Topping's a process. And we're all expecting, and market likely will peak, but we should see some pretty profound divergences in the AD line before then. If I look at the major indices, which we'll look at shortly, the S&P broke out to a new high. Utilities and transports are lagging, perhaps negative divergence is creeping there. The dollar was up, therefore gold and silver were down, and VIX was at the lows, recent lows. This week, as we'll see, it's a slowing down earnings period, but a couple of our favorites, including AVGO, report this week. AKRX, which has sort of blown up, I believe also reports this week. As I mentioned, it's the end of May. Is it the time to sell? We had a holiday shortened week this week. And what might be interesting will be the Q1 GDP. CNBC was, and I think it was Leisman, were making a lot of comments about not believing how low the Q1 GDP was. And then they put some research out that suggested there's at least a 1% miss, meaning it's underestimated. And then I think it was the San Francisco Fed came out sometime during the week and sort of called them out and agreed with them. So it'll be interesting to see if there's a revision upward, which could affect the trajectory of interest rates, although I think Janet already knows this and would have already started to let us know. But it might show us that the economy is a little bit stronger than the numbers suggest. Remember, stock patterns are cyclical. We're living near this red circle. I mean, there's no question that we're up and down sometimes on the same days as we go between support and resistance. We're at the highs. We probably are, do we pull back to the lows or we continue breaking out to newer highs? Remains to be seen. But I do think that this is a market that's starting to get tired, and before too long, we're likely to see a substantial correction. Now, based upon that, that means I'm up at the top here, so raising cash, taking smaller positions, selling premium, really using a lot of collars on my long-term positions to protect them. The problem is I don't know when that rollover is going to occur. Is it going to be a summer swoon that could start as soon as this week? Or do we have another run up, as some of my friends believe, and peaking sometime perhaps in July, maybe right before or after July 4th? Remains to be seen. The point of this slide is your posture and your aggressiveness and how you attack the market probably needs to change based upon where you think the market is. I always like to know my news and earnings dates, and I like to use Levitt Brothers. This is a free part of their service to show me what's coming out. We got some durable orders. We got some housing impact with Kay Schiller, housing price, new home sales, consumer confidence, mortgage index. On Thursday, we'll have some claims, energy inventories, and then on Friday, GDP, PMI, and Michigan sentiment final for May. So those are all important. If we look at earnings, just to call out some, AutoZone is a big one that a lot of people have. DSW and Brown Shoes, so it's a shoes week. Michael Kors this week. Toll Brothers. Continuing on, Spartan Stores. That's Rent-A-Centers. Palo Alto Networks, that's a big one. Abercrombie and Finch. Dang. Fred Stores. Jinko Solar. AVGO, Avgo on Thursday afternoon. Deckers. Splunk, Alta, Vive, Big Lots on Friday. So lots of earnings coming out this week. So as usual, I'll go through the market, look at some top-down analysis, show how I use some of my favorite tools, and say goodbye. I started this right around maybe 310. We'll probably go to about 420. I've had one person on the list is looking to cancel. So I promised them that if I can sign one more person up, I can give a refund, and I don't think that'll be a problem. And one of the folks that said they were sending a check never sent a check, so that means I have 2 slots still now open for the meeting. Please reach out to me as soon as possible, hgsidoc@gmail.com. Most importantly, if you have sent a check or have paid me via PayPal, you should have gotten an email confirmation back from me. If you believe you've paid and you haven't gotten a confirmation, either I've had a brain, I won't use the FART word, or there's been a problem in the mail. So you probably need to let me know if you've paid and not had a confirmation. And then we'll see what we can do to figure out what's up. But it does look like I have 2 spots left, and then we're going to shut it down. Most of you already know what we're discussing. It's $1,000 per person, and the hotel rates, if I can get them, were $199. They're a little bit higher because the room block is now closed, but I can beg on your behalf and hope to see you here in Florida in the next week or so. So let me start with how I look at some of the data I get from EdgeRater. So I've already put it together in a spreadsheet, so it's a little quicker, both from EdgeRater and from HGSI. It's a big spreadsheet, so it takes a few moments. So what I do each week is I create this spreadsheet. It sort of grounds me by forcing me to look at how I did last week, tells me what was working, what was not working, gives me a sense of what market direction might be this week, and then helps me to get some potential targets to look at more closely. And I use these spreadsheets, among other things, to help me create the various watch lists that I follow. And while that's loading, I create a number of watch lists. And these watch lists come out of HGSI themselves, various filters or views that I like. And, okay. It also includes, let me go back to that view, things that I have from investors.com, like some of the various IBD lists. From MarketSmith, the ones that start with an MS, or some of the ones that start with an MS are from MarketSmith, the MarketSmith Growth. The other MS are a number of Metastock scans that I like. And and then a bunch of TradeStation scans. And so what I basically do is I capture hundreds and hundreds of stocks that made somebody's bullish or bearish list. And then I create a top 15 list that represents the top 15 stocks from each of the bulls or the bears. I supplement them with a few other larger lists. And then I come up with a weekend chart review. And this week, on the bear side, I looked at 527 charts, which, by the way, are not necessarily bearish. Some looked like buying opportunities. But those that came out of my bullish scans, there were 681. And I try and look at each of those charts over the weekend to get a sense of the market. Now, during the week, I cheat. And what I cheat is I really go into my TradeStation and I do a couple of scans in HGSI. I do my group inclusion report in HGSI. And then I basically run a couple of my scans here, looking for high close and low close dojis and person buy and sell signals, combine those, and then that's the list that I do during the week, which is a lot less laborious and is closer to 100 charts and not 1,000 charts. So let's start with an idea of what the market did last week. So let's go to the beginning. So this is from HGSI. I looked at all my lists on the end of day Friday. So these are lists that I chose last week. And this is their performance from the end of the week on the 15th. At close on the 15th, which is the data I used to pick the list, to close on the 22nd. And I excluded all indexes, and I calculated based upon the closing on Friday to closing on Friday. So the first thing I noticed when I scanned down is there's a lot more black than red. So that means it was a relatively positive week. However, we can see the S&P 500 was relatively flat, only up 0.16%. The vast majority of the groups doing better than the S&P 500, which tells me that basically growth was in fuego. I can see that in green, MarketSmith 250 was up 1.37. The HGS 100 was up 1.6. The IBD 50 was up 2.28. And then if I look at some of my specific lists, my holdings, if I had kept my entire portfolio the same for the week, would have been up 1.33. That would assume no hedges. It would assume equal dollar weights. It would assume I didn't affect my portfolio. Typically, I'll look at my buy watch list, which more closely reflects what I ended the week with, and that was up 2.19%. Other things of interest, the GIF Group Inclusion Report All-Stars, which I call my top 30 on the Friday before, were up nearly 3%. So it was a great week, I would say, for growth, for breakouts, for relative strength, and those are the types of stocks that we here like to buy. From a Hindenburg perspective, there's been no Hindi, although take a look at this. You require new highs to be less than twice the new lows. Lawyers at work, let me shut that down. You require the McClellan to be less than 0. You require a rising moving average on the NYSE, and both the new highs and new lows to be above 2.2. We are really close, interestingly. We are only a little bit shy on the percentage of new lows. So it'll be interesting to see if the entropy continues. Why is the Hindenburg important? It's unlikely for us to see a major correction in the setting of no Hindenburg firing. The Hindenburg has fired before every major correction in the last 50 years. About 1 in 4 Hindis actually turns out to be meaningful, and we do have 3 of the 4 things firing now. Bucketology, I'm looking at the S&P 1500 and looking at within the Bollinger Bands what decile the percentage of stocks are in, and then how many stocks are above and below. So I've got about 60% above the midline. That's modestly bullish. Interestingly, I have very few stocks at the high end of the Bollinger Bands. That's actually good because if I saw 30% between these last two or 40%, then I might be more inclined to believe that this market was about to pull back. So I see no evidence here of the market being overheated. I look at the markets themselves, and I've got percent B change, percent B on the major indexes, and the Woody indicator, percent B times bandwidth. And I'm looking for green as a buy signal, red as a sell, yellow as chop. And we've been in chop now going back through for 2 months, over 2 months. Maybe a glimmer of hope popping in here with some green as the percent B has moved up into the green range. Now, I use EdgeRater to run a number of other things. These are George Lee setups where I'm able to find stocks in a squeeze and then find which of those are having either breakouts or breakdowns, what type, to find potential buy candidates. I might look at daily, I might look at weekly. If you're a fan of Morales and Catcher, we have Code Blue and Code Red, which can be done in HGSI or in EdgeRater, where I run the scan and coming up to the top are the types of stocks that are meeting their criteria for what they like to buy as part of their growth investing. I'll point out Himax and Beta as 2 stocks, and maybe even John Deere, that we'll come back to and look later. Now, if I want to be short the market, I have Code Red. Marvel Technology got killed. Ross Stores is giving it up. Maybe even Chipotle Mexican Grill. And they come to the top here if you're looking for potential shorting candidates. I'm also a big fan of seasonality. As I mentioned, I could use Seasonality Trader. I can use Magenta Trader. I can use Best Choice. There's also some cursory. I'll use Seasonality with an EdgeRater that doesn't do any fancy algorithms. Just look out at the next 1 month of trading by symbol and gives me a clue here in green. So I've taken the market, Quidel up 12 out of 12 years, Illumina up 11 out of 12 years, showing me some high probability movements based upon historical performance. I also can look over here and see that Enersys, well, that's not a good one. How about eGovernor, up 10 out of 12 years, an average of 11%. BE Aerospace, only up 8 out of 12, but 9%. So looking for big winners that have a combination high winning percent as well as a high percentage gain. And then I run some other scans, and that helps me to populate that crazy looking list of watch lists. In TradeStation, I like to look at the market and combining some of my favorite tools. So one of the tools I'm going to look at is the Elder Impulse Indicator. And the Elder Impulse Indicator will paint the paint bar of the stock or the index. A green paint bar means the coast is clear, it's okay to be long, or you can be holding. A blue paint bar basically tells me that I'm flexible to do whatever I want in the market. And a red paint bar says I shouldn't be going long, it's okay to short or be holding. So as we have an auto envelope, now you'll notice that indexes and stocks have a tendency to ride up for a prolonged period on the auto envelope. I have these little red dots here that are at the top of the paint bar, and those represent a scanner looking for MACD divergence. That would be negative divergence there. If we ever see them on the bottom, that's potential positive divergence. And then these bigger dots, magenta and the cyan, are person, sell, and buy signals. I also have my high jump indicator here looking for extension, which we're not going to see today. Here's a weekly and a monthly. So I start on the NASDAQ, blue, green, and blue. So predominantly okay, a hold, but okay to buy signal based upon the color of the paint bars. As you can see, we're in a person buy signal, going back now probably 2.5 weeks. Our high jump's only at 79.50, and we're green on the weekly, blue or green, I can't tell on the monthly. Clearly consistent with being long. The NASDAQ still looks good. The Dow, not so good. All right, so this is a big change over the last couple of weeks. We've got MACD divergence here. We've got a person sell signal and a blue paint bar. I would argue that perhaps the Dow is being pulled down by this, which is utilities, which you could see has a red paint bar. The S&P 100, blue, green, green, MACD divergence concerning. The semiconductors, where a lot of strength in the NASDAQ has been green, green, and on a buy signal. The S&P cash market, blue with some MACD divergence on the daily, green with MACD divergence on the weekly, still in a daily buy signal, high jump at 75%. A little bit worrisome. S&P futures, blue, blue, green with MACD divergence on a buy signal. The NQ100s, person buy, blue, so I'm getting a little cautious there. The Russell, pulling back in blue, blue, and green on a longer term buy signal. And those are the futures. Here's the cash market. It looks the same. So what did I just learn? I learned that the Dow is under pressure, and I suspect it's probably from transports. Utilities have not been working very well either. Hold on one second. Just curious if I could figure out. Okay. These are the Treasury notes and the interest rates. And I'm putting it up here because they're going to go up and the market's going to go down. They're going to go down and the market's going to go up. They are not at their recent highs. Let's even switch this to another interval. Let's switch this to, say, a weekly. And you could see since 2014, this must be about when they started quantitative easing again, they've been a relatively rapid drop or consistent drop in the interest rates, but they are creeping up. They've got some topping tails here, so maybe they're going to give it up a little bit. But this is also on a weekly chart. Reason why I point this out, I talked about it last week. Rising rates, bad for the market, good for banks. Good for having money in the bank. Rising rates could also be bad for utilities who have to borrow money, for REITs, for bonds, for MLPs. So there are very few parts of the market that benefit from rising rates, and rates have been rising. That'll be interesting to see if they pull back in and form a trading range, or if they continue to move on up. I forgot to do one thing earlier. I have so many different computers, I sometimes forget to put all the stuff in the right places. Let me just put this in here. All right, so caution might be appropriate. Let's open up HGSI, and I'm opening it up in Major Markets Plus. I'm using a T1 view, which is a balanced technical, all technicals, price and volume, heavily weighted to 1 day's performance. And let's open up the S&P 500, and we'll start there. I mark these charts up a lot during my discussions. Every once in a while, I'll clean them off. Here's the S&P 500. So the first thing I always like to do is I like to step back. Let's put on a weekly, and let's give it some space to remind us that we are currently at the high of over a 6-year giant move in the stock market. How giant has this move been? Well, if I guesstimate the low to be here and guesstimate the high to be about here, we've got a 221% move in 325 weeks of the market. It's a pretty nice return. I had a couple employees that I suggested they buy TNA and leave their money there, and I think they actually did, because they made a few comments to me over the years about their money's still there and they're just riding it and that they've made a ton. But it's been a great market. So it should not come to any surprise that we're in one of these concerns about when we're going to have a pullback. And if you start to look at the distance between the prices and the 200-day moving average, this is the furthest we've been. We are certainly at a stretched amount, and one should expect some correction at some point. That said, we're not stretched off the 50 or the 17-day. And we had a pretty good pullback in 2011, started in July. Here's 12 in May. Not much of a pullback in 13. We've hit in September of 14th. We had a bingo and came down and hit the 50 weekly moving average. But for the most part, this has been a very orderly and behaved market. So in my mind, we've been in a trading range for some period of time. And I actually thought that we had formed, I know the yellow doesn't come through very well, sort of a wedge, and we broke out. Let's actually, as you could see here, let me clean this up a tad. I had a lot of things on this, my goodness. Here was the old high. Let's make this pretty thick and make it red because it's going to be a resistance. Hold my shift key, left click. We broke out to new highs. And what I think I said last week would be, it would be really bullish for us to come back and test and hold. We've tested and held. So the question is, does resistance become support, or do we quickly break back down? Now we could have also drawn it right here But even drawn there, whoops, I'm supposed to let go of the mouse before I let go of the shift key. Even drawing it there, they have the same result where we have the entire week staying above. So we have a breakout there. It'd be interesting to see whether we keep it. Obviously long in the tooth. As long as we stay above the top and probably the second line, then it's easy for me to be bullish. But we'll see what happens this week. I have mixed emotions on this market. If I look at the Dow, we know it's not going to look nearly as good. And you could see that the Dow, let's clean this up a little bit. Those old trend lines no longer matter to me. Kind of. Let's go from its high. You could see it closed above the high a couple of times, and it had a pretty bad day on Friday, closing down on Friday 53 points, and certainly failing at breakout. And if you wonder why the Dow has been troubled, it's pretty easy. Take a look at, again, we already looked at it once. Transports failed the 200-day moving average. Think planes, trains, and automobiles. Planes, trains, trucks, I guess, instead of autos. And if I look at utilities, struggling here on the 200-day moving average as well. Other things I like to look at are the NASDAQ. Steady, nice as we go. The NASDAQ has not retaken out its highs, either overall high, failed at the prior closing high. Whoops, you got it. I always got to remember, take my target, hold down the left mouse, hit the shift key and move it to the right, hands off the mouse, and then off the shift key. So we failed to take out new highs on the NASDAQ. Let's hope we can take those early in the week. And if I look at the Russell 2000, way off the new highs, sort of in the center of its trading range. The dollar, as I mentioned, had a strong week, and you could see it moved up 1, 2, 3, 4. Gapped up on Tuesday, up on Monday, gapped up Tuesday, Wednesday, Thursday, and gapped up again Friday. For the week was up, I believe, 3.7%. All I got to do is switch it to weekly, and let's see what it says, 3.14%, my bad. And if I look at the VIX, I guess maybe the futures were up differently. If I look at the VIX, you can see that the VIX is struggling to get back above its moving averages, which is bullish as long as it stays low. But when the VIX starts to rise is when the market will show its age. So again, not a whole lot of excitement there. The S&P looks great. The NASDAQ perhaps getting close to breakout as well. The Dow troubled because of its children, the utilities and the transports. And the Russell sort of in the middle. So I don't see anything there that paints immediate doom and gloom for this week. It's going to happen one of these weeks, but we'll have to see how the market goes and trade the market we get, not the market the pundits on CNBC say we're going to have. So now that I've got a sense that I can be in this market, although perhaps not all in, perhaps with collars, perhaps with a mixture of long and short, let's go down and take a look at what the groups are telling me. We start with 175 groups, and if I hit and look at how many have a 2-day force up, I'm sort of surprised that there's only 31. That's not a good number. It tells me that the leadership of this market is getting narrower and narrower. That's worrisome. How about to the downside? Same number to the downside. So let's take a deep breath. I'll take my deep breath, get caught up for a second. Let's see if there's anything here that's meaningful. So one thing that's interesting is that all of these must have had a crossover down this week because they all have zeros in the days since it crossed over. So that might be interesting. If I go to the 5 days down, 40 groups are down, 5 days up, 47. So again, narrowing leadership, the number of ups dropped from a 5-day window down to only 31. So let's go back to the 2-day down. We have diversified banks to the downside. Take a look at these real quick. And you could see here Deutsche Bank had dividend of 80 cents, which is nice, but gap down with a PSAR reversal. JP Morgan looks kind of toppy. Banco Santander. I know there's a lot of talk about a big settlement with several of these banks, and perhaps that's what got these banks down here. I was looking for Wells Fargo and Bank of America. They're not here. Large pharma. Now, I actually have a position in Bristol Myers Squibb, and those that have been following me for a long time know that I'm an oncologist or cancer specialist. Some are probably aware that the large ASCO convention, or the American Society of Clinical Oncology, meets starting Friday and Saturday in Chicago this coming week, and this can be market moving. Bristol Myers has a drug called Opdivo, which is a new immune therapy for lung cancer. The name of the trials, I think, are called Checkmate. They should have some interesting data that could be stock moving. I really like what BMS is doing in cancer care now. And in fact, if you look at them on a weekly chart, you just get a sense of the strength of this company really since October of last year, being in a very nice move. They also pay a dividend of 2.2%. Pfizer, below the 50, will also be presenting some data at the meeting. So some weakness to start with in the large pharmas. Apparel, Ross Store was one that really looked tough this week, and you could see on Friday just a really big move down by Ross Stores. And really firing off a number of signals. Firing off the short and long-term bongo up here are negative. Distributing in the ABCDE category, and the 13th and 288 force are negative. And this was a MOBO breakdown in a squeeze, a PSAR reversal, and a big kahuna to the downside. That's a pretty strong move down on a stock that's been a big leader in this bull market, certainly since August of 2014. But even if I go back and look at a monthly chart, this is a stock that in March of 2009 was trading in the $15 to $20 split adjusted range. And you could see it's made it up over 100 of late. Food and drug stores, super value pulling back. Integrated oils, restaurants, infrastructure software. This has been a big leader. Let's take a look at the first couple. Rackspace, one of the longer term cloud players, big sell-off here. after earnings with blue dot. In CyberArk, I had some $60 or $65 puts, and I finally said enough, and I let my puts get exercised. I made a lot of money in the stock. I wrote calls, bought puts, sold puts along the way. I just don't, it's probably going to go up to 100 now and get bought out, but it wore on my patience, and I had some puts on for a while for protection. And I finally just said, take it away, and they took it away. All right, let's look at to the long side. The fact that I spent time actually looking at some of the short side should tell you that I'm a little bit concerned about this market. So let's take a look at the top 10. Number one, internet media. Last week I went long on Baidu, and I'm going to write this down on my little list here to show you how I incorporated the person indicators to help me make that call. That hurt my ears too. I apologize for that noise. This here is Yoku. Big breakout. Kahuna's volume turning up. Everything green. Don't know the earnings per share on this. Hasn't been making money. Not my kind of stock. However, Baidu got interesting to me down here. And I felt that we had set a new low. As Dan Fitzpatrick has sometimes says, I thought it was done going down, and I got back into the stock intraday here on Thursday. I believe it was Thursday. It may have been the day before. But I got back into the stock this week. PSR reversal, Mobo breakout, starting to turn green up above. But if I go into I don't want to jinx myself and call it a short. So if I hit Baidu, B-I-D-U, here's what I look for. Here's where I got in. So I got in, I probably got in when I took out the high of that day. So I got in on this day. So that would have been Tuesday. So what I'm looking for is a couple of John's signals. I look for his person buy signal, which I have a rectangle. Some people, they have an arrow. This is one of his best calls, which is called the high close doji, which is one of the, it's a trading system in itself. And this is from his lifetime indicator set on TradeStation. So if I find a stock that meets my screen, I start to see my indicators turning green, which are the HGSI indicators that I ported to TradeStation, and I can get a person buy signal and a high close doji. That's when I get excited. Now, a couple weeks ago, and this tells me the downside of this stuff, we got excited about DDD. And we got excited really for all the right reasons, to be honest. It's back a little ways. Here we go. These orange are high close dojis. And I've learned to take high close dojis as trades. So we had a day here where I had a high close doji at the same time as I had a Mobo breakout, a pocket pivot, coming out of a squeeze, a PSAR reversal, and a forced kahuna. So I took it long on this date here where all these things are firing, which coincided with the high close doji. The thing that I wanted to point out was, it actually, we have a managed portfolio that John and I have started, and this one really skews our data because I took a really big position before we agreed on position sizing. But the point was that we sold it when we got the sell signal up here. And we had bought options that were about $1, and we got a couple dollars back on them per option. But the point was, when you buy stocks that are in long-term downtrends, okay? That pattern run up and run down. You're buying them in a counter-trend rally, and this was a beautiful rally, but it was a counter-trend rally, and you have to be careful on your stops. Baidu is in an uptrend, okay? It's in a pullback in an uptrend. This is the monthly. I can look at the weekly, shallow pullback, but it's still in a pullback. And so when I get a buy signal on a daily, I have to keep in the context that it's below the 200-day moving average. It's a retracement in a downtrend, and it's likely to fail, and therefore I trail it up and I take a little scalp on it. Had a big move on Thursday and Friday. I'm making money on the trade, but I'm not going to give it a lot of rope to hang itself. Back into HGSI. Yahoo, this here day on the downside was because of concern that they won't have some tax benefits related to their spinoff of their Baba stake. I think there still remains to be seen whether the shareholders will get it tax-free or not. You can see it was bouncing by the end of the week. So the exciting one there to me is Baidu. The next group, internet-based services, C-Trip had a big move. This is talk about gappy stock. Gapped up in March on earnings, and that would be, in Morales and Catcher's book, a viable gap up that occurred at the time of a Mobo breakout, at a squeeze, and a kahuna. Then we had earnings come out here, and we had another viable gap up from a squeeze and a Mobo breakout. And then we had another viable gap up. At some point, there's going to be an exhaustion gap. On the other hand, if I put this on a weekly chart, kind of looks like it's breaking out from a cup and a handle. So this might be a very interesting stock. It's run too far. I mean, it broke out at 70 and the stock is now 85, so it's tough for me to chase this. But what a good looking stock. And I guess the message there is step back and look at a longer time frame. And I think this is a very viable breakout, but I'd look for a pullback before I would chase it. Expedia also broke out on Friday. I'm not sure if this is in sympathy. Right click, go out to the web, look at FinViz. So they sold something to C-Trip, and they both went up. That's interesting. SoFund Holdings, below the 200-day moving average. In its favor, a mobile breakout from a squeeze. Everything is turning green. And a big kahuna. I don't trust the stock. I've had challenges with it. And I certainly wouldn't be going long until it got above the 200-day moving average. One does have to like, in this dark gray, the group strength. Bit Auto, I might have more interest in this one. Group strength is great. Mobile breakout from a squeeze. Everything is green. Look at the nice increase in volume and a big kahuna. Again, I worry about resistance here. You could see back here it broke above the 200 and came falling right back. But if it can get above that 200 and hold, this might be something interesting again. Earnings don't look so good. I thought they looked better on MarketSmith, so I'm not going to go to that now. That might be something you want to check. Next group, semiconductor devices. These have been good to me. I don't own Micron, but I own several of the next. So Micron's been in a downtrend. Don't know why it comes to the top, except you figure the force looks at volume and price movement. 20 million shares, and it had a big price move, for 50 cents. So that's probably why it's on the top. Qorvo only has 3 million shares. Cuervo, it's a funny looking chart, to be honest with you. Um, it's the old RFMD, which merged with TQNT, and then they did a reverse split. Actually, not, yeah, reverse split, so they'd have higher price shares. So it's hard to know really a long-term pattern here. But it is getting to the close to where its previous high was, and a breakout from here. I've seen some estimates up to 120. I'm in it because I like the precursor companies. I like the fact there'd be some combined savings. I love their earnings per share growth, which is 3 times the multiple, and the industry group strength, and I am long Corvo. Earnings are already out. They had a nice beat. NXPI, basing sideways, let the moving averages catch up, had a kahuna and a big up day on Thursday, kind of a doji on Friday, earnings slowing down. This has been a leader. I think they got Triquint or Fairchild Semiconductor they're going to have to be bringing in, but sort of a high base here and breaking out after what's been a great run. Got some of that. AVGO, I've got this one too, similar pattern, big run up sideways. Nice move on Friday, turning green, great earnings per share growth. Earnings come out this week. I'm going to have to figure out what to do with it. Analog devices, hadn't looked much at this one before. Similar pattern, up move, sideways, breaking out. And that's kind of what the semis are doing. Skyworks, big uptrend. This one I did play and made some money off the breakout. Broke out last week on Monday. Sideways the rest of the week. Great earnings per share growth, much higher than its multiple. Cirrus Logic, I'm not playing this one, but maybe I should. Again, uptrend, sideways, potential breakout, good earnings per share growth, much bigger than the multiple. So the semiconductors, that's the pattern. Uptrend, sideways, maybe breaking out now. So you probably ought to have some of those that I just mentioned. Since I've talked about them before, I suspect you do. In fact, let me go back to one here. The next one on the list. So this is Bottom Fishing 101. It's not for the faint of heart, but this has been a destroyed company. This was the guys that were making the Google Glass and built a factory, and then Google changed their mind. It's craziness. And you could see it's come down from $16 down to almost a 200 weekly or 1,000 daily moving average. It looks to me like it's done going down, where I might consider going in here with, it's a big stop, probably between 6 and 610, and I'm trying to get some early on Monday. I've got a kahuna, rising volume, and a great industry, and everything turning green, and a mobile breakout from a squeeze breaking above the 50. It's a 10% move to the 200-day moving average. That's my target. I think Himax looks interesting as a bounce. And then another bounce. Here's AAOI that kind of looked like that back here when it broke above the 50. That looks like it wants to break out here. And I'd had my little box, and we broke out of my box, and I'm now in AAOI as well. I have a lot of positions. Those that know me know. They used to joke I have my own mutual fund. I have my own position rules that I follow, and I have a relatively good-sized account, and I have strict money management rules and strict stops, and therefore I don't feel crazy having a lot of positions. But again, that's a to each his own decision. Biotech, one of my favorite categories. Sarepta has a Duchenne's muscular dystrophy drug. Boy, it's not even going through the FDA yet. They just agreed to a path for a rolling submission. It's still a couple years out before this drug could be approved. But you could see the gap up it did. It probably continues to go higher, mostly because the stock, let's go to a weekly, has been getting slammed, previous high in the 50s. But it's long ways from an approval. But you have to believe that anybody who gets a drug approved in muscular dystrophy has a great opportunity of pricing it high and getting a good market share. Speaking of pricing it high, Alexion, known for having small number of patients and huge price tags. Had bottom, looks like it's trying to get back up. I'd be a little bit concerned about overhead supply, but if biotechs keep moving, it'll get up there. Bluebird Bio doing some interesting things in the cancer world with cancer genomic therapies, and you could see a nice steady uptrend. Very speculative. Now, one thing I do want to show you is its market cap is $5.8 billion. I'd rather see a company like this with a market cap in $3 to $4 billion. 5.8 is kind of expensive, but they're pricing in a lot of success on their drugs in trial. Tough, again, for me to buy this, but if you're lucky to buy it as an IPO and you're still holding it, you got a big smile on your face. This could be a market-moving week as some of their early data gets presented at ASCO. Gilead, I've seen a lot of people bearish on the stock. I love this stock because we talk about a squeeze. Here's a stock that came out of, you could draw trend lines anywhere you want to draw them, but you were basing sideways for several months despite great earnings per share growth and great revenue growth. And we broke out about 2 weeks ago. We continue to go higher, and I see nothing on this chart that says it doesn't continue a little bit further. Pharmacyclics, this is a stock with one drug. It's about to be bought by AbbVie, and you could see its market cap with a drug on the market is $20 billion. And so if you look at Bluebird Bio, if it gets an approval, it becomes a $15, $18, $20 billion company overnight, which is a tripling of the stock. So one could argue that their stock price is a factor as much because of not a lot of shares, as well as a speculative exuberance in price. Notice that almost all these have cancer-related stories. Synergiva Biopharma does not. This is a buyout takeover, so we can skip it. Don't know anything about Cellular Biomedicine Group. Had a big move up above the 50 with a kahuna on Friday. I'm going to do some research on this one. Another preclinical. Its market cap is small. It's less than $500 million. When they're that small, they're kind of risky. Sage Therapeutics, breaking out here. Don't know them. What do? Central nervous system disorders, traumatic brain injuries. ISIS. I did get back into ISIS this week. Maybe too soon. ISIS is another company that's active in the oncology world. Buying it on this pullback here, sort of a cup and a prolonged handle, but I thought it was breaking out and hasn't broken out yet. Did have a weekly kahuna as well. So a lot to like in biotech. A lot of these are small companies. A lot of them have something going on in cancer. I'll be at a meeting with these guys on Saturday morning on a panel discussion. ADXS, they had a big run this year in a pullback, close to getting back to the top. They have an oncology portfolio as well and a market cap of $692 million, so a small cap stock. Another one I saw some bearish comments on this weekend was Celgene. Actually, somebody had it rated as a sell. Now, my Celgene's got some put protection still through the middle of June. To me, it still looks like it's got downside risk of 110. It's not in an uptrend. It's in a short-term uptrend, but it's way off its 128 peak. So Celgene continues to look tired here, sort of running around its 50, which is now sloping down. And a company that I bought, I don't understand. They're in cancer. Never thought that their story was that good, although they did some licensing. But look at the earnings per share growth on AMAG. It's gone from losing money to making 6 cents, 4 cents, $1.11, 70 cents, and 96. It has a multiple of 58 and an earnings per share growth rate that's going to be over 1,000. Obviously, something has to give. But if you make the 70 and the 96, it's $1.66. plus $1.11 is $2.77, plus 4 cents is $2.80. You're growing 1,100. Even if you take the PE down from 58 to 30, cutting it in half, you got an $85 stock. I think this goes higher unless there's some lies, and I have no reason to suspect that. As I said, I own the stock, and you could see revenue is going up as well. Here's a pure, I own it based upon one thing. I love big earnings. Autos, Tesla, beautiful run from 180 up to 245. Looks like it's getting tired here. Earnings not to end of July. GM, they got announced that they're likely going to settle with the government and admit some level of wrongdoing in their ignition. Of course they will. All the current execs were not the bosses then, so it doesn't make them look bad, and they can get rid of a lot of lawsuits. Earnings per share look great. The cars, look at the Impala and the Malibu, the Vet, look actually pretty darn good as well. Looks like it's putting the bottom. It wants to go higher. I like to see it get above the 50 and hold, but GM looks like an investable company again. Right click and back. E-commerce discretionary. We'll look at the first couple. Actually, we'll look at a bunch. Alibaba, similar story to the ones I showed you in the beginning, in that we got some buy signals on John's indicators in the last 2 weeks. So this here is Friday, Thursday, Wednesday, Tuesday, and we get notice in his software of a potential high close doji intraday. And I took the trade intraday on this high close doji, mostly because earlier in the week, but I wish I would have taken this signal, my indicators down here went to all green. So I was already looking at this. 2 weeks ago, we had a weekly buy signal. But like the others, I've got to be careful because I am in a downtrend. So this is a counter trend rally. Something tells me BABA goes higher this time. We made a nice return. We took half off our profits off the table, and we're going to let what we have left run. So I like BABA here, off the gap, and then taking it on this move here. JD.com, I like this one a lot. Currently I'm long here. In fact, if I put on a weekly chart, we might have a word for this, sort of a cup, handle, and breakout. And we'll see if it breaks out further this week. Kahuna had a breakout off of a doji on Friday. Just out of curiosity. A high close doji formed as well. High close doji has to be in a downtrend, so I wasn't convinced that this was really a downtrend here, but it's lower than it was here, so it's in a downtrend, and that high close doji with the kahuna and the mobile breakout from a squeeze. Now other stock, here's Dang, trying to stay above the 200, a couple of kahunas, everything turned green. Amazon, high base, which way is it going to go? And then Netflix, which seems to only go up, also looks like it's going to go sideways for a while. Don't understand all these negative earnings per share growth. I know that a lot of this is story. John and I were talking about this. I want to make sure I give John credit because he's the one that brought it up or said this. As they start to create more and more content, their costs are going to go up, and that could impact earnings. And most of the other networks are not getting a multiple of 172 times. About 15 more minutes, I figure. Go back. Cable and satellite. This group should be interesting. There's a rumor out now that came out that somebody's looking to buy. Let's see if I can find it. I probably erased it. I don't know if it was Charter or somebody was looking to put in a bid for Time Warner. That'll cause continued strength in this group probably explains all these gaps. Cablevision, Liberty Global, all these seem to be moving. I think there's a lot of M&A discussions there. Back. Computer hardware and storage. HP had great earnings. Gapped up, closed about halfway there. Underneath the 200-day moving average. Couple of kahunas in a row, all green. That might be interesting to watch. Brocade Communications sideways on the 50, a kahuna. Probably had earnings come out. EMC, below the 200. Super Microsystems. I've been in and out of this guy. I'm out now, but I like the fact it broke above the 50-day moving average. And I know I saw something here I liked. MCI. Had a person's weekly buy signal. That's what I liked. Well, it's moving its way up over the 200, and my indicators are starting to turn green. So I like this one as well. I'll be watching that to see if it can break and hold above the 50. Specialty Pharma, probably Mallinckrodt, Valiant. All right, so a couple of these are worth talking about. Valiant, serial acquirer. Thank God I kept 1,000 of these shares. I had a lot of these, and I sold them along the way up. I thought they were in trouble back here. Let's go to the weekly. Big run up, correction, breakout down here on the weekly, and a run from 140 up to 240 since November in the last 6 months. I had gotten shaken out of some shares up here, and I had sold some more down here because I had a rather substantial position. Kept 1,000 to let it run, so it's now actually a nice part of my portfolio. Great earnings per share growth, certainly some of the highest in the business. A multiple that's also high but less than the earnings per share growth. Love this stock. Every time it seems to disappoint in one way or another, it comes out with another acquisition. Horizon is another one that I own, and this is a stock that had a big run up. It's got a history of doing bad things, to be honest. Run up, correct all the way back down to 50. Run up, pull back here, gapped up, pull back to the 8-day again. It's always news related, whether it's inventory or accounting or whatever. It's had some great earnings per share growth. I've seen better earnings in other sources. And I think it looks like it wants to run again, pull back. I think it wants to break out. And you notice that on a lot of these, I am jumping back into TradeStation. I have these indicators available to me in Thinkorswim, cursory, that's not the full set, and in TradeStation and Trade Navigator. And you could see on Wednesday it had a high close doji, trading up to another person indicator called a last conditional change, which I'll let you learn that from him. He's got some great education courses. Don't want to steal that thunder. Also on a weekly buy, and you could see my signals are starting to turn green as well. So I like Horizon. I like the first one. And there's a lot of other interesting stocks in here. The next group down, and this is what I do on a nightly basis. I take a look at the top 10 groups, healthcare supply chain, and this is in here because of a takeout. A lot of good companies here. So Omnicare is being bought by CVS. So CVS on the acquisition noise, opened down, closed high. It's probably a great acquisition for them. I'm a big fan of the distributors. Here's AmerisourceBergen up sideways to the moving averages catch up. This will break up or break down from this point. A breakout above, I'd want to go long. McKesson has already broken out. Sideways, broke out. I'm long this one. And Cardinal Health fighting its way back to the 50-day moving average. I've always liked this group. So on that note, we've talked about the market, identified that the S&P is leading. The transports, utilities have been lagging in negative divergence. We looked at the elder indicators and saw that the Dow is actually in a sell signal right now. We looked at leading industries to the upside and downside and have seen narrowing in the number of positive groups, sort of consistent, I think, with the late stage market. And I'll keep an eye on that breadth. We looked at some great stocks. And let me just finish by going through some of my choices for this week. I've got a very narrow list that I put together where I put an additional filtering by looking at John's stuff within TradeStation. Many of these we've already talked about. This is JD.com. I like it. Cup, handle, breakout, sort of a cup on a cup. All green, mobile breakout from a squeeze and a kahuna. I like JD long. I am long. Bit Auto, I like to see it continue moving up. Had a kahuna on Friday out of mobile breakout of a squeeze. It's a buy, potential buy. Horizon Pharma, pullback, breaking out again. I am long. AVGO, I am long this. AVGO, and I got to decide what to do with it. Uptrend, sideways like the other semiconductors and breaking out. I'll probably take profits before earnings or sell some calls with some elevated volatility. Rewalk, this will be one of my roll the dice plays of the week. Rewalk was an IPO. In fact, if I step out and look at a weekly chart, I see a stock that was as high as 44 and as low as about 10. So it's come off the low about 20%, broke above the 50 on Friday, a mobile breakout squeeze, Bible gap up, and a kahuna, all on the same day. And I'm just very curious, sort of. I think I probably already looked, WLK. But when I put it into my TradeStation on the lifetime person indicators, I got a person buy signal both daily and weekly. Volume is breaking out, and you could see my indicators are firing in multiple of them. So Rewalk, high risk. If I was to take this trade, and remember this is for educational purposes only, I'm going to set a buy stop probably above the high of the day. That was $13.99. I don't want to keep it if it drops much below the 50-day moving average, which is at 12.35, and that's still about a 10% stop. Might be too far of a stop for me to take the trade, to be honest. Gray Television, sideways to the 50, caught up, broke out this week. Starting to run away from me. Great earnings coming in. I think this is a hot group right now. I'll probably look at Gray Television. Agenus, another oncology-related biotech, biopharma. Uptrend, sort of peaked, pulled back. Looks like it wants to run again off of the 17-day with the kahuna. And this was a big mover on Friday, and I put it into my little screen. And it too had a person buy signal. All my signals fired on Friday. So I find this one to be interesting. AAOI we looked at earlier. This is a stock that, I don't know if I showed you, this was in a long downtrend, trying to make its way up. And I especially like it breaking above the 50-day moving average. Impacts Labs is a generic house. I think LCI and others. Uptrend, sideways. Not yet, but it had a kahuna on Friday, mobile breakout from a squeeze, get above a 50 and hold. Good earnings coming into the stock. I might be interested in looking at that. Another bottom fishing stock was Weyerhaeuser. This is a REIT that pays a 3.5% dividend, but at least in Market Smith, it's got some great earnings coming into the stock. And I bet you that's a high closed doji because there's a doji within 3 bars. It's closed above the high of the day. So let's just take a look at that. High closed doji, 2 days after a person buy signal in a weekly buy. PMC Sierra, I just like the pattern. Uptrend, let's take a look at a weekly. It's in an uptrend, pull back to major support. A 50 weekly, 200-day daily moving average. Had a mobile breakout from a squeeze and a kahuna on Friday in a very strong group. They have no idea about this company, but I love the name iDreamSki. Great earnings per share coming in a stock that's pulling off the bottom with a couple of kahunas this week. High risk. Supernus Pharma, big uptrend, sideways, moving averages catching up. I think this one wants to run. ANIP, another stock that's pulled back, that's got good earnings per share coming in, that I'll be watching, not buying, watching. Home Street, a bank, sort of a leading bank, leading picture of a bank, big uptrend. KCG Holdings, high base. We'll look for some momentum before I jump there. And Dine Equity, I actually brought this to John as a short for our fund back here in the end of February, early March. Actually, check that. I brought it to him back here late April, and it actually pulled back down the 200-day moving average. Looks like it may be wanting to go back up again. So these are the stocks that I'll be following. These are the best that I could come up with after looking at hundreds of charts. Once again, my meeting, I do have 2 spots left, June 27th through 29th. $1,000 includes all your meals from breakfast on Saturday until snack on Monday afternoon. Dinners at my condo, clubhouse on Saturday and Sunday evening, all included in your registration fee. Somebody asked me about John's stuff and do I still need HGSI? And I thought that was a great question, and I like to answer it right now. www.personsplanet.com, and it's going to already know my computer. All right, what did I do? Persons Planet. Let me try that again. Personsplanet.com. And I want to come in as a non-member. Okay. So John's been around for a long time. He's got a number of different indicator packages for Trade Navigator, for TradeStation, a cursory set's built into Thinkorswim. He does a lot of online webinars and seminars. He's got one coming up tomorrow. If you email me, I can make sure you got an invite for it. That's a freebie. John does a lot of things that I do. Obviously, I've spent the last 30 years being a doctor, and he spent 30 years becoming a great trader and teacher. John is a top-down guy. He looks at the market. John looks more probably at sectors and sector seasonality, where I look more at stock and industry group seasonality. But he finds the leading sectors, the leading industries in those sectors, and the best stocks in those industries, and tries to buy things as they are breaking out with his indicators. And I've only showed you a little bit of what he does. Now, some people think he's a day trader. He knows how to day trade, but like myself, who also knows how to day trade, I think the big money is made in position and swing, and that's what we spend most of our time doing. John has a chat room, which I am often a guest speaker in, usually when he's on an airplane and can't speak for himself. And in his chat room, it's both a combination of day trading and swing trading, an amazing fund of knowledge, and I've come now to rely on his indicators. So why do I need both programs? HGSI, well, there's no programs besides Genesis and Thinkorswim that I'm aware of now or for the near term will have the full set of John's indicators. So they're not available in HGSI. I'm not even sure of all the special sauce that goes into the buy signal. And I've tried to I've tried to see if I could create some similar types of things, and I can't do it, and I'm not trying to do it. I find that HGSI is still my go-to platform for market analysis, for scanning the market from an industry group and sector rotation as well as the leading stocks. And it's where I do my best chart work. But I do find both from a validating my picks in HGSI with John's indicators in the various platforms, or scanning for John's indicators and looking at the charts within HGSI, that they become very complementary to me. I highly recommend you find out about John, consider some of his training, whether it's mentoring, his courses, and I have information and probably some discount coupons for some things. If you're a TradeStation or a Trade Navigator fan, I would email me and I can tell you why I love his indicators. But to me, it's not about TradeStation versus HGSI. It's not about person versus HGSI. It's about me putting together my toolbox that enables me to make good money in this market. And it would be nice if there was one product that did everything. There isn't. So I have a handful of products. On that note, I say good night. Have a great weekend, great week, make some money. I will not, emphasize not, be planning on one next weekend. I'll be busy at ASCO. Thanks, everybody, and goodbye.